Restaurant Brands International is out with its latest earnings, posting a beat on the top and bottom lines, fueled by international sales growth at Burger King and Popeyes. José Sill, Restaurant Brands CEO, is now joining us fresh off his earnings call. Jose, always great to get some time with you. Let's put to the U.S. to the side. We're always talking about the U.S., and we'll get there in a second, but you did see some pretty big gains at Burger King and even Popeyes in emerging markets. What's driving that?
Hey, Brian, thanks again for having me. Good to see you. We're really excited about the progress we made this quarter. I mean, just as a quick step back here, we were up 14% in system-wide sales, 9% in EBITDA. We saw really strong performance in same-store sales at Tim's in Canada with 14% growth. U.S. was steady improvements for Burger King at 0.4% positive. And international, as you mentioned, really strong performance around the globe in our BK international markets. We were up 18% same-store sales. And what's happening there, it's similar to what we've seen in other international businesses. During the pandemic, we saw a really strong growth in terms of our off-premise business, whether it's delivery or other digital channels, pre-order and pickup, also curbside and drive-thrus picked up as well. And as things opened up over the last 6 to 9 months, we've seen that business stick, and then we've seen growth in our on-premise business. So people are coming back to the restaurants for that dine-in experience, which has been such a strong part of the international business for such a long time. So the combination of the two, with good menu offerings, good promotions, good digital, which we're north of 50% internationally on digital sales, is really driving tremendous growth there, and that's feeding our pipelines for development internationally for Burger King and for Popeyes and Tim's as well for years to come. So we're excited about the progress, but we know we've got a lot of work to do, and we're just in the early stages here.
Yeah, you talked a good bit on the call this morning, Jose, and maybe a little more than I've heard from you guys in the past about menu innovation, new things you're bringing to the market, notably in Tim Hortons. What are you doing in the menu innovation department?
Well, I think the first step we took, Brian, is that we learned from Popeyes. Popeyes has an incredible culinary heritage, and since the acquisition back in 2017, and I've gotten close to the team there, working with the culinary folks, recognize that we need to have that type of strength in all of our brands. And so we've at Tim Hortons, we brought in a chef and a beverage expert for the first time in at least since we've been involved with the brand, but I think for the first time ever. So we've got real strong culinary expertise and working on products that are craveable, which sounds like a pretty straightforward approach, but it's hard to do, especially when you're going to do it at scale at high volume. And so our teams at Tim's, we've done the same at Burger King. We're doing the same at Firehouse. Having expertise and talent on the culinary front helps drive a mindset around product quality, craveability, things that customers and guests are looking for, and we're doing the same with beverages. So that shift has now kind of resonated with the consumer. We've seen a transition from ideation to in-restaurant testing and then launch, and we saw some good performance with loaded wraps, loaded bowls, with our cold beverages as well, and we think it's just the beginning of the journey for Tim's, and we'll see the same or similar performance and growth with BK over time.
So, Jose, hey, it's Julie here. So it sounds like that the new products are paying off. What I was sort of trying to tease out from your numbers, and forgive me if you talked about it on the call and I didn't catch it, but when you look at those big comparable sales numbers, how much of that is volume and how much of it is price? Because I know you guys, like everybody, have done some price increases.
Hi, Julie. Yeah, look, there's obviously been some price increases for our businesses, especially in North America. It's also been a shift in mix. So with our lunch offerings, with the loaded bowls and the wraps as well, and some of the cold beverages, the price point for those products is a little bit higher naturally than what you would see for a hot brewed coffee or breakfast sandwich, for example. And so a shift in mix, in addition to some of the pricing and new customers coming in addition to growth as well from our digital platform, all of that is what's contributing to our performance. We also saw a little bit of growth coming from the fact that in Canada, we've seen an easing of restrictions towards the tail end of the first quarter and heading into the second quarter, and more people are on the streets. And so that pent-up demand that we saw in the U.S. probably last summer we're beginning to see here in Canada now, and we think that's upside for the business in Tim's Canada.
And it sounds like from what you're saying, reading between the lines, that you're not seeing a trade down effect. In fact, it sounds like you're seeing exactly the opposite when you talk about this different mix.
Yeah, there's a little bit of all things happening here. So we do have obviously a value segment of our customers that kind of look around and hunt for those types of opportunities on the menu, and we love and welcome those customers as much as we do those that are looking for more premium indulgent products. And so the success of our brands domestically, but also internationally, has always been when we're offering a balanced approach, when we have strong core offerings like the Whopper at Burger King, or the chicken sandwich and bone-in chicken at Popeyes, or some of our kind of main menu items at Tim's. When you're strong on core, have balance on value, and then occasionally sprinkle in some premium products that address that indulgent consumer and occasion. That balance is really strong now for Tim's, and we think it's a key priority going forward. And it's the same approach we're looking at for Burger King, for Popeyes, and for Firehouse as well.
Jose, that core consumer that goes to a Burger King, goes to a Popeye, they're under a lot of financial stress. I mean, they're probably out there right now paying 20% more for Clorox bleach, or that was my takeaway from their earnings call last night. Do you have to start rolling out a recession value menu? I'm going to drive up to that Burger King and I'm going to see a lot of items priced at $1 or even below that.
Yeah, look, I don't know what to call it or what to label the current environment we're in now, Brian. It's certainly challenging for businesses. It's very challenging for our franchisees and for our guests. And so the beauty of our business is that we've always been focused on a balanced approach. We tend to see in these types of environments, folks trade down. Maybe the lower income consumer might trade out of the category, the quick service category. But we also see folks that maybe frequent casual dining or full service restaurants. They may trade down into QSR for a bit of time during these moments. And so our approach is to focus on the guest, make sure we have the right products, the right offerings. And we've always had value on our menu. Value for money has always been a key component, but in good times and in tough times. And it's really important for us to stay focused on that and make sure we deliver a balanced approach for our guests. And that's what our teams are doing.
I know you've pulled back on promotions for the Whopper, but just given how volatile things are in the macroeconomic environment, do you want to bring that back? Do you want to put dollar Whoppers on the menu?
No. We have a $5 Have It Your Way meal, which features a Whopper Jr., and we've rotated the product there, and we think that's amazing value, and we've seen some good response from our guests. But the Whopper is our flagship. It's a core product that's been around since 1957. And we think removing it at a core discount and elevating it to its proper status is a key part of our plan for the BK US business. And we'll continue to drive frequency and visits for the best sandwich, the best burger in the business. So we're excited about that. And
let me challenge your competitive spirit here, Jose. This Taco Bell Mexican pizza has really lit up social media. It definitely lit up Yum Brands' results last night. How do you respond? Talk to me.
We've got 4 amazing brands that offer amazing products, Brian. You know that our culinary teams now are looking to continue to innovate and drive guests in with new ideas, but also ensuring that, and our franchisees do this every day, they deliver our core products that people love: the Whopper, the Popeyes chicken sandwich, the hook and ladder at Firehouse, and now the loaded bowls and wraps at Tim's, in addition to our cold beverages and donuts, Dream Donuts. That's what we're good at. That's what we need to focus on, and delivering that consistently is what's going to drive consistent growth for our brands for years and years to come.
I like he didn't even mention the Mexican pizza. Oh, I love that competitive spirit. I love it.
I thought he was going to say Canadian pizza.
Oh, wow, good.
Sure. Okay. I don't know. All right. Jose, good to see you. Thank you so much. Jose Sil, Restaurant Brands International CEO. Always good to catch up with you.